Okay, welcome back. So in the first part, we did the first fundamental point, which was what is the dollar index? We saw what is it, how against which pairs it is traded against, and why, what it is, why it is an index. So it's not a predictor of anything. It is actually showing you what is the dollar value against many other pairs. Today we're going to see how can it be used against gold, not against, it's a conference on gold, on euro dollar, on GBP dollar, USD, etc., etc. There you go. So as you can see, like any other pair, we chart price point, price of interest. So the dollar index is much following the fundamentals that are behind the USA or the US economy. So it's very, since it's not a pair, it's not a currency itself, this index. So it's not exactly, I don't use it on the technical standpoint. I use it as a confluence to trade other pairs. So we have these key levels, historical key levels, we have these trend lines, we have these price points of interest, we have exactly these PSAs, the key level, as you can see here, again, bouncing from here, taken from this level. So, and then you identify trends, identify the general behavior and what is common to happen. This is the very strong bearish move during all the pandemic with all the stimulus that was printed by the Fed. So how can I use it? How do I use it every day as a conference? In general, I use it more often. If you see, I never use it on the 1 minute chart. I always use it on the 30-minute, 1 hour, or maybe intraday on the 5-minute chart, because what I want to see is not the price point. As you can see, the same candle setup that I use for trading the pairs. I mean, candles exactly like this. As you can see, these are my candle setups that are also showing here and showing you that at a price point, then it gives you the signal of continuation of the price point of the price in trend. As you can see here, for example, in this case, there was none, but I mean, I use it for the price points of interest. So if I start the day and I see that dollar is here, so dollar is breaking above the range, is reacting, I say, okay, let's be careful, because in this area, it's very important to monitor the dollar to see if it breaks again below and then makes a bearish trend, or as you can see, breaks above. This is sort of like a currency. So if you want to see, this is a breakout of the level of the previous highs, the PSA, and it can show you that, okay, the dollar as in the basket of currencies, as you can see here, that I showed you in the previous video, is gaining strength. So if dollar is gaining strength, what can I do to take advantage of it on the currency pairs that I usually trade? So we jump here, we jump on gold, and we say, okay, so this is the 5-minute chart. Let's go to yesterday, which is much more clear. So yesterday we had here the report, the very good report for the dollar. Go on the 5-minute, and it's exactly here. As you can see, also I use the 1 minute on gold. So you have this news coming out at 2:30 p.m. Central European time. which is good for the US economy. It's a positive news. It's the PCE, which is the sort of inflation staying under control, which is a good news for the dollar. What you see is a liquidity grab, and then again price pushing back up, as you can see, retesting those previous lows on the dot, and then continuation down. So you have your bias, and here at 230 you start to see exactly that the price was already in a range. It had already bounced off this PSA, and it's that in the next 5 minutes is continuing bullish. So in the next 5 minutes, so this is the next 5-minute candle. As you can see, you still on gold have no clear direction in this 5-minute candle. But what you have is that, because remember that gold is not a currency, it is a precious metal. This is the same 5-minute candle here on the dollar. Is a much clear bullish candle, engulfing on the previous one, closing above. So you have this information that the dollar is bullish in a moment that gold is still not bearish, is still not clearly bearish. So you have this information that for the dollar, you have your fundamental knowledge that says that that particular report was good for it. You have the proof that the dollar index is moving in the right direction. You know that USD makes gold makes these liquidity grabs very easily, and then you have to wait. Of course, this is if you jump on the euro dollar, you will see a much clearer bearish move. I can I'll show you, because euro dollar is a currency and follows exactly on the dot the dollar index, because it is one of the pairs that are traded against. As you can see here, as you can see, it's the same. You have a weak candle before, and then a nice engulfing candle, weak candle before, and a nice engulfing candle, because this euro is one of the currencies that are part of the basket. There is no gold in this basket of the DXY, but we have this information that it says all other currencies are weak against the dollar. This means not weak, but is the dollar strong, stronger than most of the currencies? And since we are trading gold against the dollar, even if now this 5-minute candle is not showing yet the dollar strength, we know that at a price point of interest, 1785, 1789, or 1781, the main bias will be bearish. So it's not always like this, because the gold doesn't always predict, it's not always following on the dot the dollar index, but in this case, as you can see, it's very clear. Then you have the move down, the break and retest of the PSA, and then a continuation down, and then you have the New York Stock Exchange opening and moving below again. And you add this information because the dollar index against all other currencies were showing you that this strength. Then if you have this reaction at this previous PSA, but you have a pullback and then continuation up, you can enter safely. As you can see here, after New York Stock Exchange open, this correction is more or less this correction. New York, you see this range is more or less this range, and New York Stock Exchange open, and then you have the continuation here, continuation down. But as you can see here, dollars continued bullish, while the USD, the gold was in a range. That's why I say it's not perfect. Instead, euro dollar continued bearish. So that's why the correlation on gold and dollar index is not perfect. But it can give you the idea. It's a confluence. It can give you a further idea of what might happen on the pairs that we trade against the dollar. But it's very, very important to understand that gold is not a currency. Gold is a precious metal and is traded in a very different way. It's dependent on supply and demand of gold, on the inflation, on the edge against inflation, on the sentiment of investors. So is not so at this bearish push of like 200 pips, but which is much more than what happened on euro dollar in terms, as you can see here, 100 pips, 0.91%, 1% for both of them. But the point is, you have to understand what is each instrument. This is a currency and is exactly one of the currency that make up the dollar index. But also for gold, it might be a very good indicator and confluence factor. As you can see here, this 5-minute candle that I showed you was totally different than the result of this 5-minute candle. We can break it down as well. As you can see, actually, it's almost the same, but close much bearish than gold. As you can see here, the movement was much more here than it did here, as you can see. But as you can see, close very, very, very bullish. So as you can see, sometimes it can give you very, very strong confirmation. Sometimes it's not that linear. Okay, because I was looking at the wrong one. Okay. But it gives you an idea and an overall status of the US economy, the bouncing from previous highs, which as you can see here, we still have to retest them and the reactions, but this is more of a confluence used mainly for other pair that we trade against the euro, the dollar. This is it for part 2. See you for the part 3.